Hey guys, happy Friday. I'm trying to do something I haven't done before. I'm trying to show a video I just put up live. So, anyway, while we're still waiting for people to get here, hello to anyone that's here. I just released a new world premiere video like 5 or 10 minutes ago. It's not a premiere though, it's just a regular video. So, I'm going to try to watch it and show it to us, and then hopefully people will tune in, and then by the time it's over we can maybe discuss it, and we'll also maybe look at some charts and talk about some usual Friday stuff and maybe have a drink. I'm drinking a seltzer, but I'm addicted to caffeine. And sugar. I think it's more the sugar I like than the caffeine in that. But anyway, the sweet. All right, guys. Well, let's see if I can do this, I should say. So I'm going to share screen. It's Friday the 13th. I'm not going to get angry again. For anyone who was here last week, Tom especially, I'm sorry. I know I'd acted like a jerk. Gosh darn it. All right. Today's a different day. We've got the screen shared. All right, let's see if this works. The only thing I'm not sure about is if you guys will be able to hear the audio. So let me know in the comments if you can hear especially if you can't hear the audio, let me know in the comments. All right, so let's see if you guys can hear that. Let's make sure there's no screw ups. All right, let me check back in with you guys. All right, could you hear that? I guess I'd see comments here. Maybe no one's watching. Let's see, there's a way when I share it to put share audio, remove from stage. It's in the settings. I think loud and clear. Perfect. I know you can hear me loud and clear. I was hoping you could hear the other video loud and clear. Okay, perfect. All right, I'm going to shut up. Let's get this other damn video on. All right. Perfect. If anything's wrong, I'll check back in on the comments in a second. All right, guys. I'm sorry. I just saw the comments that you can't hear me. Gosh darn it. Okay. Well, that's fine. It's Friday the 13th, so that's to be expected. Okay. This is easy to overcome. This is a simple thing. When I share the screen, you have to be sure to hit share audio. It's not checked. And gosh, well, yeah. So you have to make sure that it says also share tab audio. So I'm just going to choose the tab, the specific tab, and the tab out is, yeah, you should be able to hear the guy speak, or me speak. So hopefully you can hear everything. So just to confirm, you can hear everything. Okay. Live audio good. Playback of video has no audio, but you can hear it now. All right. Just making sure. Just making sure. I mean, it's Friday the 13th. Everything's good. I just don't want to have any screw ups. But it is what it is. All right. So do I need to go back and do any of the video? I guess not. I guess you guys are hearing the video. Anyway, it's up on YouTube if you want to watch it. All right. So here we go. I'm going to turn back on. Gosh damn it. See, it is Friday the 13th because that's not the right one. Gosh darn it. Okay. Hang on. I'll figure it out. I'm sorry about that. Okay, this should be good this time. So look at this. I mean, people love SFAL, and SFAL is a great fund. I'm not dogging SFAL at all. It pays what, 20%. Alti pays 80 to 100. So once again, Alti pays more and total returns more than SFAL, and it's been spanking it, you know, off the recent lows. All right, well, look at this. Everybody loves iSpy. iSpy is great. What does it pay? 12%? Something like that? Yeah. Great fun. Gets a ton of upside. Not as much as Alti, and it pays about a fourth. Everybody loves AIYY, and I went all the way back to the beginning on this one. I went to the inception of whichever one's the oldest. I just went back to inception. And yes, and this shows you Alti's got off to a rough start. It's barely got its head above water, but it's been on fire lately. And it's appeared to pick up steam after the strategy change. We're going to talk about that a little bit in here. But you know, they're dogging AIYY, which is a great fund. AIYY just the past couple of days passed it. They had been beating it, but this last little up move, I didn't copy the slide. It was pretty much tied. AIYY had just nipped it lately. Now look at this one. You got to be freaking kidding me. It's beating the freaking Qs. The Qs are all upside and no yield. I mean, they yield what, 1% or something, 1.1 and a quarter, mainly because of Apple's dividend. I mean, and a few others. I mean, that's freaking amazing. It's beating the Qs. There's only one thing that could be more amazing than beating the Qs off the recent lows. Only one thing I could think of to be more amazing, and that's if it was beating Q freaking DTE off the most recent lows. You got to be, it's totally throttling everybody's darling. QDTE. ULTY is having its way with the prom queen under the bleachers. I know it's a dark analogy. ULTY is spanking QDTE. It's also having its way with XDTE. And it yields way more than those two. But that goes for Defiance. It goes for everything. Not everything. Not everything. I shouldn't say that. All right. So there's good misconceptions on both sides. There's several misconceptions. The pro-Alty side, the pro-high yield side, there's a misconception that because Alty is now using a caller strategy, which is similar to a covered call, but it's a covered call with the addition of a protective put. I think the misconception is that because of this, they're immune from big drops in the NAV. That's kind of true. However, Alty could drop about 10% on a really bad day, even with the callers in place, maybe 8%, something like that. It depends, but I was looking at it last night, and on a really bad day, now that hopefully won't happen. All right. In the old days, before the put options addition to the strategy, the caller, there's no telling how far it could have dropped, but it was way more than 10%. I mean, the new strategy is definitely a great idea, but it doesn't make it immune from dropping. I mean, it makes it immune from dropping maybe 50% in a day, which is good. I mean, but not immune from dropping 10% in a day. And I'm talking 10% if the NASDAQ drops 5% in a day, or even 3%. It'll drop way more than the NASDAQ because these are the most volatile stocks. That's why they're writing options in these stocks. That's the way it works. All right, so the put options are great. They control a little bit of risk. Like I say, in the old days, 50% would have been theoretically possible, or the way they used to have this fund constructed, it could have lost 25% in a day easily. Okay, no more. Anyway, so it is a step in the right direction, but that is a misconception coming from kind of my side of the camp. But like I say, it's way better than before. Okay, so on the other side, I get this one all the time, that it's a bad fund. Supposed to be a bullish fund in a bull market, yet it keeps losing. November, we got all excited. It got to the 1070s, then distribution, then it never recovered. So if it does the same in January, we'll be lucky to hold 9 after distribution. Better funds in the YieldMax universe. And I mean, he's not wrong. I think there's maybe one better fund, which is YMAX, but I don't know. I like Alty also. But yeah, it's probably going to have to reverse split at some point. That's kind of the way these funds work. I mean, it doesn't necessarily have to, but I mean, generally when they start getting in this range, they'll split them, and I think they'll probably run it up to 50 when they do. But anyway, it doesn't have to happen, but we'll see. All right. So the thing is, the reason though that it probably is likely to happen is because if you have an ETF that pays 100% yield, you need an underlying that's up twice that amount not to have any NAV depletion. So Alty doesn't really have an underlying, but the stocks that represent them have to be up a cumulative 200% on the year, which can happen in a good year. My second favorite ETF lately is definitely YieldMax. YieldMax is a daily standout in the Buffer Report. I talk about it all the time. I bought some recently for account managed, but I would say whatever fund is in the YieldMax universe, it's good. At one time, 1 month, it can change from 1 month to another. Sometimes, because it depends on what underline's hot. These ETFs all do the same thing. It's all in the prospectus. It's mechanical. It's numbers. It's math. They don't vary that much. They don't vary near as much as I think that a lot of people think they do. That's a misconception on both sides. But I mean, and I would also say to the point about it just being a bad fund, that's why I was trying to show those slides. I mean, it has got off to a slow start for sure, but I don't know if you call it a bad fund, because it's beating all those other funds that are good funds. It's not just being one or two of them, and not just by a little bit. It's beating a lot of good funds badly. Now, I will say this. YieldMax, it didn't quite beat YieldMax. YieldMax had it even since August. AI, YY had it, and so did YMAG. So I mean, and of course, MSTY and the ones that you would suspect, because they're beating everything. But of the index ones, it was one of the best that's diversified, one of the very best. But to know whichever fund is doing is going to be the next fund, you'd have to be able to predict the future, is my point. So like I said, it's doing better in a bull market than a lot of funds. And also, remember, we can't predict the future. What can you imagine if Kamala would have won? God forbid. It would have been great times for certain segments of the economy, solar stocks, vaccine-related stocks. But unless you can predict the future, how would you know? Now, I will say that the fact that Jay Pestricilli, the fund manager of Alti, was positioned on the right side of the Trump trade, even before the election. He had 2 or 3 Trump stocks and he had 1 solar stock, which he dumped the next day out of Alti's portfolio. So, I mean, I think that's another case of Alti being a decent investment. The fact that Jay was on the right side of the Trump trade. Now, there's no guarantee that he'll be on the right side of the trade in front of the next election, but that was good to see. And I think that's partially responsible for why the equity curve has been pulling away lately. That and the change in strategy. All right. So another big misconception: yield doesn't equal total return. We talk about this all the time. In fact, the more yield you get, the less total return, generally speaking. Not with Alti. And just on about every slide I showed you, they were out total returning and out yielding. That's not the norm. That's not the norm. Generally, the high total yield stocks, as you guys know, generally are some of the lower total returns, and vice versa. Some of the ones that only yield 6 and 8%, like JetQ, and there's a lot of them. There's some of your best total return, JEPI. All right, so that's just kind of the way it goes. But is Alti breaking the matrix? I mean, it kind of would appear maybe so. So let's think. So when you have an ETF that yields 100, even though we understand we won't get the 100% in total return, most likely, and we realize we're going to get some of it. It depends on how the market does. All right. So don't plan on getting all of it. Plan on getting some of it. All right. Cases for Alti. Okay. No other ETF can dynamically get in and out of positions as fast that I know of strategically. And look what they did right around the election. Alti took its hymns and suffered no electoral dysfunction this year. Jay, like I said, he was in 1 solar stock and he dumped it. That's great. And all those strategy curves I showed you, they had taken off lately. Look at this. Just to refresh, there's Alti compared to QDTE, and QDT's, is the GOAT lately of the index funds. It's murdering all the other index-based funds. Daily index funds. It's killing. And T-SPY is doing really well too. And I compared Alti to T-SPY, and Alti's beating T-SPY just by about this much. Not by a lot, but it's beating it. And especially when you consider it, Alti yields 3 times as much. It's not the way it's supposed to be. Alti's doing something different. And like I say, I'm not comparing it to a bad fund. I'm comparing it to one of the best funds. And so now, it's only about 6 months, so it's, take that also with a grain of salt. We'll see how it does over a year. We'll see if it keeps it up, but it's been on fire lately. So, all right, come on, man. Do you know of any other ETF where the managers have this kind of leeway to jump in and out of stocks in a tactical basis? The thing I really love about this is the reason they're able to do this well and get away with it is because of the option selling program. Even if they pick a bad stock, they still earn the premium off the option trade. And now that they use puts also, they don't risk, that much money. So, the strategy's max loss is limited. What's not to like? Not to mention they can dump a stock if it sucks. They aren't married to any stock. Look at Yield Max, which I love. It's married to some stocks. It's married to MRNY right now. But also who cares with Yield Max, because that's kind of what indexes work. You're going to have some bad ones in indexes and you're going to have some good ones. You also have MSTY and, some of the killer ones right now. So it you know, I'm not talking bad about Yieldmax, but it is true that Yieldmax is more likely to get married to a bad stock, in my opinion, than ULTY is. All right. So I used to talk about triple QI all the time. I even did spreadsheets on it. It was kind of state of the art. Then triple QT came out. Now it's QDTE. It's kind of state of the art. All right. We're going to talk about that some more in a second. I get this comment all the time. And I really like this dude. I'm not putting him on blast. He goes, Max, why are we pumping ULTY? The CTF was $15 6 months ago. Now it's $9.40. Income investors are getting destroyed. This trend of lower lows continues. And first of all, I just like to say, of course, I'm not pumping anything. I never even say like and subscribe. I don't have a Discord. I don't have any guide or anything to push. I don't beg for subs. Sometimes I don't even remember to put the little thing on the bottom of the screen that has my PayPal. I mean, you know, and I don't tell people to go all in and they can retire in 6 months. If I did that, I would have a lot more subs and everything. Anyway, I'm trying to grow organically on purpose. And I want people like R. Martinez who are questioning what, you know, if these things are real, and anyone else who's really trying to learn the ins and outs of these and the strategy behind these. So I go where the innovation is. So it was Defiance at the start. Defiance was the first to market with the daily index-based high yield ETF. To this day, it's the highest index-based yield that doesn't use leverage there's ever been, there probably ever will be. The high yield Karens, like me, have influenced the fund managers, for better or worse, to be more conservative, but at the same time be more aggressive, i.e. Yieldmax has uncapped the upside while we at the same time had them cap the damn downside on Alti. Retail wants everything. Retail wants all the upside and none of the downside. And the managers are doing the best they can. Usual caveats apply. No more than 20% of your overall retirement in these ETFs. Not that there's anything wrong with these, but there's tons of other great investments out there. I had a whole video on it the other day. There's great closed-end funds and great municipal funds. And of course, if Trump cuts taxes, the municipal funds aren't going to be valuable anymore. But anyway, they work under Democrats because they're tax-free. If you're a Democrat in a big city that makes a lot of money, you love municipal funds. Anyway, municipal bond funds. All right. But no more than 20%. Don't YOLO. Figure out how much income you really need to live off of for your retirement and buy just enough of this high yield to accomplish that goal, because these aren't without cost. Nothing is without cost. Any income-based investment on some level costs you future upside. Even if it doesn't look like it has erosion or whatever, just by the fact of you putting money in an income investment and taking it out of growth, you're potentially costing yourself money. So we always want to keep all our money in growth that we can, in my opinion. This is my experience. But a guy's got to live, right? Well, these high yield funds could definitely play a part in that. All right, guys, let me know what you thought in the comments. Like I say, I wasn't trying to put anyone on blast. I like R. Martinez and the other commenter just fine. But I just want to say Alti's not doing half bad, especially lately. All right. See ya. All right, guys. Thank you for sticking with me there in the middle of the video. Let me remove that. And then, all right. Well, now I can see your comments and everything. All right. Anyway, I'm definitely not pushing Alti. Hey, I saw a couple of corrections I wanted to make in there. I'll take questions from you guys in a second, but I kept saying in there, I kept comparing Alti to Yieldmax. I said Alti compared to Yieldmax. I was talking YMAX. I meant Alti compared to YMAX as an ETF investment. And I also wanted to show you there's some more charts we could look at. There's some charts I left out of there, but I was also kept saying now AIYY is beating Alti, but in the slide I was showing you it was losing Alti. What I meant, since August, AIYY off the August low has just clipped Alti. In fact, we can maybe look at that. Maybe you guys might be interested. So I have one or two more things I want to show you, but I'll definitely take questions and maybe we can look at some charts or something. I just saw a news release that crossed at 303 about some bomb going off in Ukraine and NATO jets were scrambled. And I wonder if they waited just right till after the market closed to do this, because that's always what happens. But since that's probably since that may be an emergency, let's just check VIX futures and see if anything's moving, or let's check futures. I mean, I don't have any reason to think that, but it's not a good sign when NATO jets are scrambled. And my futures are delayed 15 minutes, so but the SPY is live. SPY would be cratering right now, so it's whatever it is, it's fine. I guess it's handled. Although SPY closes at 3, I don't know. If you guys have any ideas, let me know in the comments. Okay, so let's get back to business, though. I wanted to show you guys. Well, I need to share the screen too. I know I need to share the screen. It's all good. It's all good. It's all good. So I'm going to share. I'm going to share the entire screen this time in case because I'm not sure it was last time. All right, so check this out. Here's all I wanted to show you. So ULTY, and I also talked about T-SPY, but let's stay on AIYY. I'll stop doing the weave like Trump does. This is just off the August lows. I wanted to show you that I wasn't BSing. Well, they're drawing the chart wrong. Hang on. August. Oh, wait. Here we go. All right. Now, hopefully you guys can see that. I'm gonna check in on and make sure that you guys can let me know if you guys can. Sometimes I don't know if you can see the sub chart. I'll answer that question in just a second, Charles. But I have this damn sub chart. There's got to be a better way to do this. I used to have 2 monitors. Anyway, all it shows, in case you guys aren't able to look, it shows Alti versus AIYY off the last the August lows. Alti's up 23.23, AIYY is up 25. So I mean that's pretty damn good. But you saw over the course of time since inception, Alti's beating it. I also wanted to compare Alti to T-SPY off the August lows. T-SPY is a great fund. I didn't make a slide for it. T-SPY actually wasn't in business till August 15th. So we'll look at Alti versus T-SPY from August 15th to now. And Alti's up 26, T-SPY's up 12. All right. Anyway, what else did I say? Well, I was also saying in there, the people don't understand these funds don't really vary as much as people think. I was referring to the Yield Max universe that they do some different things a little bit, but basically they do pretty much the same thing day in and day out on all the different Yield Max stocks. When I said I was overgeneralizing, I should say all of these don't do very much except for Alti. Alti does vary quite a bit. So that's another thing I really like about it is their ability to their ability to get in and out of positions. I think that's worth something too. But anyway, who knows what the future will hold. I think Alti's a good bull market fund. It's basically the too long don't read. All right. Thanks for your patience. What else is going on? I'll answer your questions now. What's going on, Charles? You have some Alti. It looks like a good time to lower my cost average. Yeah. So in other words, buy some. Just making sure I haven't missed anything from you guys. I appreciate you guys for being here. What's Bert saying? What are your thoughts on BD? Okay. Good question. The reason I talk about option selling is because that's what I do. I like to sell options. But I do emphasize there's tons of other good alternatives for passive income. The best other one out there besides, I think, covered call ETFs are closed-end funds. And I do talk about it sometimes, like Cornerstone's amazing and it has a long track record, but there's others. All I know is I don't know enough about it to even know what I don't know. So I try never to talk about them. I try to watch other people's channels and try to learn on closed-end funds. Business development corporations, I mean, if you're in the right one, I mean, I don't know. But yeah, I don't really know. I'm more of a math guy. In my mind, when I fall asleep, I dream that there's a ratio. I dream that there's a secret ratio. And there's a secret ratio out there of S&P options to VIX options. And the pros, they just always, they have a way of just always making money and never losing money because they're properly hedged. That's the kind of stuff I'm trying to look for. I'm trying to look for the pot of gold at the end of the rainbow via math. And I think my friend Echo, who just walked in, Ola Echo, is also a fellow math guy. In fact, Echo's better at math than I am. But anyway, R. Martinez, hell yeah. Well, hell yeah. Let's talk about Misty, Coney, and NVIDIA. Let's do that. Okay, watch this. We're going to do, I want to try to, can you guys see this? If I bring up this comparison, let's do Alti to Misty off the August lows. And just see, you want to see something get throttled. Misty's throttling Alti. But it's doing kind of to Alti, basically what Alti was doing in those other funds. But yes, now that is a good old-fashioned throttling. Now, let's do this. Now, but let me ask you, could you guys see the little sub screen that comes up or not? I'm thinking maybe not. I'll answer that question in a second. But anyway, Alti is absolutely throttling Misty. I'm just not sure if you guys can see that. Because what I wanted to show you is Misty versus Mister. And I also want to look at NVIDIA versus NVIDIA versus NVIDIA, A versus Y. But anyway, somebody let me know if you can see this little screen of this comparison of Mister and Misty. It shows here that Mister's up 211%. Holy shit. I mean, it's gone since August. It's gone from 131 to 411. Okay. Meanwhile, Misty's gone from 23 to 37, which is, equally as amazing. But this is a prime example. If you're, this is just a machine. It's a math equation that's trading, taking numbers from one column and putting them into the other. But you just have a lot to work with when you have something that's up 211%. Hell, they're able to, what's this thing paying? So it's paid $10.47 on $23, but that's only in a third of a year. So it's paying $30 on $23 in the third year. So it's 130% or something. Been averaging lately, whatever. Not that to keep that up, but averaging more than 100%. So you got to take the 130 off the 211. Well, what does that leave you left over? That leaves you about 80 left over. Well, the 80 left over, look, and so that leaves you some upside for these guys to get. They're able to get some upside. Anyway, that's a beautiful sight to see. So that is a beautiful sight to see for sure. But yeah, Misty, Coney, and NVIDIA. I don't know if you guys saw that little thing, but anyway, let's look at NVIDIA versus NVDY. Or no, let's look at what's the Mr. and Misty's probably the GOAT right now, but let's look at NVIDIA versus NVDY. I like to look at this because these ones, gosh darn it. Well, that's not a very good comparison, is it? August 15th to December 11th. Is that correct? Are they? Look at that. I didn't do that. Oh my gosh. They're almost identical. Like I said, I don't know if you guys are able to see that, but NVIDIA's up 13.4%. NVDY is up 14%. But let's look at how it happened. NVDY started at 25, went to 24. It's 23.96 or 98, but let's just say it's 24 to make it easy. So I moved down 1 point on 25. Was that equal? 4%. All right. Now, NVDY's NAV at the same time went from 122 to 139. So what is that? That's up 17 on 122. So it's, I don't know, 12% or something. Anyway, so stock goes, I guess it's right there. Stock goes up 13 on 0.4%. Now the yield fund gets 14.57%, but as you guys can see, it actually loses 4% on the NAV. So then if you lose 4% on the NAV, but you still end up total return 14.57, means you pick up 10.57 elsewhere in the option trade. I mean, that's why you buy these high yield funds. You're trading, you're getting an income. You're trading upside for income. But anyway, this is a good example of how it works. And you can see both guys are in about the same position as far as your net worth. if I had my net worth in NVIDIA and you had your total net worth in NVDY and we did it on August 6th, right now we're worth the same amount of money. However, you have a lot more cash in the bank. I only have 2 cents in the bank. I'm giving you my 2 cents right now. You guys have, whoever, you have 466 in the bank if you have, if you have NVDY. Now, I probably have some more future upside growth, or I definitely do, because I have the stock, you have the yield fund. But anyway, you can see right here, it's about the same just since August. But in any case, in most cases, like, let's look at Coinbase and Coney real quick. We'll look at Coney. Oh yeah, Coney on top. Like I said, I hope you guys can see the sub screen sometimes doesn't come up. But I know you guys can see the main screen, but I was just hoping you can see it's a little app or something. Anyway, but yeah, so here's a good example. So Coney started at 15 and now it's at 17, just from August till now. Okay, great. Coinbase started at 197, now is at 313, but paid no yield. So of course it gets more upside. So what is that? We'll call it 200 to 300, made 40%. Well, I'm sorry, it's actually 60%. My guesstimating is not working as well as it used to. Okay, well, Coney went from 15 to 17. Okay, that's 2 on 15. Was that 8, 10? We'll call that 10%. But yet it had a total return of 35% because it picked up 25% from the freaking high, selling the high yield options and monetizing that. So it's a decent way to, it's not a bad way to, it's not for your whole portfolio, but these aren't bad investments, especially if you're bullish in a stock. If you like Coinbase for some reason, yeah, rock and roll, right? All right, I'll take questions now. No more filibustering. All right, so let's see what's going on here. Charles, I appreciate you for being here, and you as well, MJ, all of you. Martinez, appreciate you as well. Your question, Martinez, kind of it was part of the reason I did the video. But anyway, but I was just trying to show some good. I was trying to show the other side. You don't see a lot of positive stuff on Alti out there. You see a lot of negative stuff. All right, so let's see what everyone's saying. What's Echo bitching about? He's saying any weekly products other. Okay. Well, I don't know. You mean, are there any new ones out there on the horizon? I'm telling you, there's one I'm really excited about, but I don't know. It's not public yet. It comes out on Tuesday, and I interview the fund manager the day it comes out. And it's not Jay, somebody that manages 4 times as many assets as Jay does. So it's a big deal for me, but I don't, I know we're having to wait till that day to talk because a certain fund's getting released. I'm not going to say what it is because I don't want to be the one to mess it up, or even who it is, because I don't want to try to figure it out. But anyway, be looking at for Tuesday. It's probably the biggest interview in my channel's history. All right, so David, I'm sorry it's taken me a while to get to this question. All right, of course, I'm not licensed to do this, but I can tell you my experience. I'm 58. Anyways, but my experience isn't the same as, but whatever, I'll tell you my experience. Okay. So you're 53, you make more in dividends than what your salary is. I don't doubt it, because by the time you're 53, the market's been pretty good the past, you've been working for 30 years. It's been a ripping bull market for most of the time. And even the times it went down for a few years, it was a great time to buy more, right? Okay. So yeah, a person in your situation probably has a decent sum. So if you're watching a channel like mine and you have 20% of that decent sum, which could be 7 figures at this point in high yield funds, you have 200,000 in a high yield funds, and you're knocking out 50% from these things. Hell yeah, you're making 100,000 a year. I mean, these things are amazing. That stuff never used to happen. Like I always say, it's not without risk, because you're sacrificing. There's always an opportunity cost, no matter what anyone else says. Even if they invent a fund someday that has no erosion or whatever, and they have ones that have very little, but I'm saying that's not even the whole problem. That's just the tip of the iceberg. That's what I'm trying to say. I'm just always trying to emphasize, be super cautious, and everything. But it sounds like you're okay. So here's what on you for your next step. I don't know. if you do have seven figures and you're doing pretty well, my next step is I would get a financial planner in your hometown, maybe somebody that knows you or something that you can actually show your financials to and talk about what's going on and, and whatever, and go from there. But it's just a fun time to be an investor. But from a practical standpoint, if you just want to have fun, I would get you an options book if you don't trade options. And, and I mean, that's just me. If you want to learn how to trade options are fun. I mean, but I wouldn't do that with your nest egg. Just, knock off 1% of your nest egg, half of 1%, get you a tasty trade account and start flipping start doing some credit spreads. I mean, I think other people around here have done that. Anyway, so that would be my next advice, is start watching Tasty Trade and just having some fun with options. It's awesome. But for the big money, get you a planner, get you some of these funds, but just don't be overloaded in them. Because, I mean, because two things can happen. If the market keeps going great and keeps going up, that will hurt these funds in the long run, because it'll make volatility come in. It'll make these funds less attractive. If interest rates go down, volatility goes down. That could happen, and that's not a bad thing, but it's something that, these times won't always be this good. Or if something the opposite way happens, I'm not saying it will, but if something were the opposite way to happen, that can make these funds not bad investments, but a tough place to be for a couple of years. But really, the whole market could be a tough place to be for a couple of years. So, but if things just kind of keep going along how they are, I mean, that's kind of the ideal, because things have been going along. They've been kind of grinding up, but they've been grinding up and staying volatile. The thing that kills these types of programs, which are called short volatility, is selling options, is when volatility where you can't sell options and make anything anymore. And that happens. And it'll happen sometimes because everyone piles into these funds, and you watch, it'll happen sometime. But that's one thing that kills it. Then also people get overloaded on these funds, and then a volatility event hits. We get a big something, like I was talking about in my video. We get one of those, and then people are all in, and they're on margin on these funds, all in on margin. And then, one of these funds drops 10% in one day. Like I was saying, it'd be mathematically possible for Alti to, and you have 30% of your account, but you're on 4x margin. So, I mean, basically you're staring at a debit that's more than you're worth. I mean, that's what I worry. That kind of stuff keeps me up at night, but that's why I always emphasize that doesn't happen to you if you have 20% or less. Because I always say, just figure out how much you need to live off of. If you have a lot of money, you don't need to use a lot of funds. I mean, unless you have a real extravagant lifestyle, figure out how much money you need. But if you've done pretty well and you're around retirement age, you could buy, not really very much I Spy in the grand scheme of things, and get you a really safe, really reliable. You could also use JEPI and whatever, but you could have a really reliable and really safe income. The thing is, the reason I talk about the other funds so much is because at the lower levels, and for people that are younger, 12% is not going to cut it. And, and so but a person like that can jump up to like something like SFOL or FEPI or QDTE or triple QT or SPY-T or XDTE, jump up kind of there in that mid range without a whole lot more risk. And so that, that's why I always talk about those stocks a lot also. But then also there's some people out there that I've talked to that say, hey, I've got everything covered. I got a job. I got plenty of growth stocks. I want to have some fun. I want to try to double my money on these things. If they double, if I can get my money back, then it's free money. No matter how, no matter what the stock's worth, once you get your money back, I've talked to people like that too. And that's legit too. As long as everything's going well and you got all that other stuff covered, hell yeah. So then when you're in that category, that's when you can start looking at some Alti and some YMAX and then some MSTY. And I don't know. I mean, so we talk about those a lot also. But yes, those stocks are definitely not for everybody because they're extremely volatile. All right, let's see what Echo's telling us here. The 10-year Treasury is now positive. It's happening. Content mature. Yeah, Echo is you are a macro guy and a really smart macro guy and has a lot of macro knowledge for sure. And I remember I met you about a year ago. I did a video and you got in my comment section. But anyway, we were worried at the time, and legitimately so, about the carry trade, and worried about a year ago that the bull market might be over at that time. Remember, I said, nah, I think it'll probably go on a little bit longer. It can go on a lot longer than you think. It can get a lot more overbought or something is what I said. Sure enough, that's kind of what happened this year. Even the one little pullback we got, which was dramatic, and it was dramatic, it didn't amount to anything. So it was a crazy year. Now, can we go another year? Can we go another year? Let's look at a chart of this. I mean, I was pretty confident last year was fine. Now, maybe we can with the, with the Trump and everything. And I mean, it's going to be good times for Wall Street. And so hopefully we can go another couple of years. But anyway, let's pull out a weekly chart and let's try to zoom out a little bit. All right. Hopefully you guys can see this. Yeah, you guys can. I could see the thing. Let's try to zoom out a little bit. And but anyway, if I didn't answer any questions, ask me again. I probably dodged some of those, or if I missed something, if there's anything else anyone wants to say or talk about. Well, okay. So last year, I remember December was a face ripper. That's when I first met a lot of you guys. In December, we ripped and these funds took off. I remember January, we had a little quick pullback, and then April, there was one. And then August was vicious. It was vicious, but in the context, I mean, in the context of the year that started here, I mean, it was vicious, but it was just a pullback to buy. I have open gaps labeled on here, so you could consider that, or I considered open gaps potential support. But also, if we start going down, there are potential targets. If we get in a bull phase on the bear phase in the shorter time frames, we'll notice it in the 30-minute first, because we always talk about that every day and everything. The VIX will blow up, but then we'll get inputs on the shorter time frame. But what they'll try to do, they'll probably try to repair one of these areas. They'll go into this 580 area, or if they get past there, though, it looks like that one's already been repaired, but this one's still open. That'd be the prime one. And we will, when we set option trades, that will kind of be our target lots of times. If we'll set a target down there and anyway. All right. So, but I really like to look at open gaps. This open gap right here, it actually filled pretty much to the penny, was a great spot to buy. This one right here never did get filled, but these ones are still open. There's an old adage on Wall Street. I don't know if it's true, but that all gaps are filled. I think that eventually, I mean, I guess eventually everything is. I don't know. What do you guys think about gaps and that kind of stuff? Okay, what's Echo's hot take? He's an expert. We're on the clock for a real recession within the next 12 months. Okay, I don't know about that, but maybe we do finally get the freaking hard landing I guess, which is a recession. Okay, yeah, I agree that even if that doesn't happen, maybe we get the market pullback that is more than just a quick 10% and then straight back up. All right. So my favorite option strategy right now, MJ, well, I don't know. There's so many of them. But the one day in and day out, the most versatile is the bull put spread. You sell out of the money puts, and then you buy a put a little bit further out of the money, pick a stock that's going up, do it a little bit out of the money for a week from now. That's the most reliable way to pick up. Do it on the SPY. Just watch the SPY all day. You can even do it every day. I'll usually do it on a Monday for Wednesday, but But do something like that. Try to pick the low of the move, look at it. I mean, that's my favorite. If I could only do, if somebody stuck a gun in my head and said you could only do one the rest of your life and you have to support yourself on it, it'd be the bullpen. It'd be selling puts. Now you can do the opposite in the bear market, but there's better ways to trade a bear market that's selling calls just because of certain peculiarities with selling calls. All right. So yeah, what else is going on? What is Charles? What's saying maintenance on MSTY is 50%? Yeah, I don't know. I don't know. I never really look at that. The other day I got some stuff in a different account than mine, a family account. And so I was in the family interface. Well, anyway, but yeah, I did notice that a lot of them say hard to borrow. But whenever it's a hard to borrow underline, of course, they jack the frickin', they jack the IV. Okay, what's Martinez saying here? Cash is king, 20% T, cash each month plus no NAV erosion. Yeah. So you're agreeing with me on triple QT and SPY T and those types of things? Yeah. Okay. See, like I say, Martinez and I, we agree on, it's like I have a good friend named Jimmy. He's in the other room. Good friend. We fight. He's a hardcore MAGA guy, and I'm a Republican conservative, just not so much MAGA guy. Sometimes we butt head on specific MAGA type issues. But we agree on 95% of everything else. And he's one of my best friends. And anyway, that's the same way I feel about Martinez. Martinez and I do not see eye to eye on Alti. I don't know that we ever will. That's fine. We don't have to. It's a big world out there, right? Yeah. So Echo Eversight, TLTW. So that's interesting. TLTW gets a lot of shit for being a shitty fund. And let's look at it. One time I said something about TLTW and somebody got in my comments and said, yeah, I was just putting in a safe allocation. I was trying to demonstrate you have to have some exposure to bonds. So I think I put in like 20% bonds, 20% oil. So anyway, somebody got in the comments and said, well, yeah, but that would have got killed lately because TLT has done terrible, which is true because of interest rates going up. It's, so here's the thing. Here's what we're going to do from now on. Yeah, TLT is they pay a steady dividend. I mean, 33 cents, 25 cents. I mean, they're good at doing what they do. That it's okay. They have interest rate sensitivity. So what we do from now on is we don't just get TLTW. We'll also get half RISR. If you have fixed income needs, you're worried about interest rates and inflation, riser is a foil to that. It's designed to kind of work inverse to that. All right. Now, the fund manager of riser may or may not be the person that's coming on Tuesday. So we may or may not get some more information. This is one hell of a fund. It's one of the best funds out there just for that purpose, because most funds get killed, even including index funds and growth funds, as interest rates go up. This fund, they have something, and it's not with options. It's a different kind of, these guys are fixed income experts. That's why I don't talk much about this kind of fund. I don't know what the heck they're doing, but it's impressive. So if a guy didn't like options, but still needs some fixed income, a little riser TLTW would not be a bad combo. Because you could get you some income and you could have some protection. So let's look. Let's look how riser. Let's compare riser. I still don't know if you guys can see this little screen, but no one said anything about it. So probably so. So let's compare riser and TLTW. We'll go off the August lows just for fun. Okay. Well, you could see. I mean, that's what I'm saying. I think they'd be a good hedge for each other. All you'd have to figure out is the right proportions. Now let's go off a longer time frame. Let's go off since Jan 15 this year. All right. Well, look at that. I mean, they were both going up for a while until the election. And the election knocked TLTW down because interest rates started going back up. Even though Trump was good for the economy and a lot of other areas and stuff, a lot of the plans he's suggesting, people he's appointing or they're afraid are going to be inflationary. So interest rates have kind of, or the 30 years creep back up, but just because he's promised a lot of tax breaks without a lot of way to pay for it yet that we know of. All right. Well, anyway, so I think that's all that was. So, but you could see that's why riser comes in handy. That's exactly why riser comes in handy. If I was a fixed income guy, and I'm not, I'm an option guy, you could do this same thing with option ETFs too, something similar, but anyway, this is the way to do it. If you're a fixed income guy, you get you some TLTW and some riser. What I was trying to show is, okay, this is almost a year. It's 9/10 of a year, but let's check out the dividend. I was going to say riser doesn't pay a gigantic yield. So that's why I'm saying you mix in TLTW, sprinkle that in for a little bit of yield. In the old days, you could have also used TRES before Jay shut it down. I know that it didn't work out, but Jay actually shut it down right before it would have started doing well. If it would have, it'd be doing fine by now. But that is what it is. But you could use some type of treasury fund. But right now, something like 70% TLTW and 30% riser, I think would make a nice allocation. I'll do some content on it in the retirement simulator sometime soon. But yeah, riser's a good fund. All right, what's Martinez saying? Yeah, of course. Martinez, that's good advice. Cash is king, of course. All right, so yes, I want to talk about this subject, Tony. About to be back in the world. I remember 2017. I got sober. That was the year I quit drinking and quit doing everything. Was 2017. It was August. It was August 1st. Anyway, so I remember those 4 years really well, and all the nighttime tweets and stuff. And I was newly sober, and I made some bad decisions, and I wasn't trading yet in 2017, 2018. Well, again, yet I was, that's another story, but whatever, I was getting my life together. But I was working with some guys. I actually taught some guys that I met in recovery how to trade. And yes, that was a great time to trade options. Okay. There has to be an ETF. There needs to be an ETF that comes out. Call it TRMP just to get Trumpers to buy it, and or also to get Trumpers to buy it. And patriots, people who are patriotic, call it anything. You could call it CRZY to try to get the other side to buy it. But what it is it because he stays up all night and tweets. Okay, and lots of times he's tweeting some BS just to cause a reaction. Okay, so anyway. All you need to do is have an ETF that buys a SPY straddle every night or an SPX straddle. So it owns volatility at night. Then the next morning it comes in and sells a straddle. So basically what that would do is you're using the daytime volatility that you earn to pay for the nighttime volatility. And if you have crazy nights, if the nights are crazier than the days, a strategy like that would bank. Now, I'm not going to do it as a retail guy, but somebody should do a fund like that. And I mean, you could, call it night. I've Googled it. There's already been a fund that supposedly did that, and I had to shut down. People weren't interested in it or did something similar. But I think that that would be an interesting fund that people could use tactically, something like that, something that monetized Trump tweeting late at night. And I don't mean in a bad way. That's part of his negotiating. He'll say something, put something out there sometimes, see how it's taken. But the result of that, or at least the result between 2017 and 2021 was generally in a few days, cooler heads would prevail, and whatever it was would reverse and go the other direction. So all I'm saying is a strategy like that would take advantage of that. Yeah. Tom Lee said we're going to 7,000. I hear you. All right. So what's Martinez saying about Trump? And I'm not trying to be political. Trump's great. I like him. Okay. Now with Trump, nothing but green sky. Yeah. Bull market until it's not. Hell yeah. The trend is your friend, right? I mean, that's why I do the volatility report every day. But what is going on with VIX and VIVIX? Have you guys seen that? Is no one else concerned about that? But yeah, Martinez, I agree with you. It's all about the underlines. I need to get better at figuring out how to do this. Yeah, I'm not knocking SPY. I'm sorry. I mean, it's free. Okay, so SPY recover. Okay, meaning the August drop recover. Okay, well, that's what I was trying to show, and what I showed was it was still behind that Alti was still in front of SPY. I thought it was in front of SPY. Maybe not. Maybe not. I'm sorry. If I missed this one, my apologies. Okay, well, that's the whole time. And yes, it's beating the shit out of it over the whole time. Hang on here. If I missed one, I'm sorry. I tried to test. I thought I got SPY. So I get SPY and iSpy mixed up. My bad. We'll do August 6th. Okay, so I mean, Alti even off the now it's if you're just talking maybe the NAV price, yeah, their NAV is NAV's great and everything. And oh, you mean it recovered that drop fast? Yeah, it probably did. Yeah, I get you like this. Okay, I'm sorry, I'm stupid. Like if we went back to like August 1st and looked at it a little deeper. Yeah, I got you. Yeah, it did. I'm with you on that for sure. For sure on that. Now I'll give you one that's even better than that, or is XFall. XFall, it's hard to tell on this short chart, but it actually made money. I mean, you can tell it made money into the, that was crazy. And it actually would have made a pretty significant return, like for the whole year had the market kept dropping. But because it was a 10% drop and turned right around and went right back up, it didn't make a lot, but it's still that this one XFall outperformed the index. But XFall did not outperform Alti. XFall is a great fund, and look, there it is right there. It was a great fund that was actually up during the pullback when Alti was down during the pullback. But XFall still and did great, still underperformed a little bit. Anyway, but yes, XFall is very defensive. SPY is great. iSpy is great. I wasn't trying to throw shade at any of them, really. Anyway, and if I missed any of them, that's why I hope you guys are telling me. But it did look like it was still behind. I've heard a rumor that those come out sometime next week or maybe the week after that, but I've heard they're coming out soon. Yeah, I mean, okay, so Martinez, so when you say trading put options, do you mean you sell a put option or do you mean you buy a put option to hedge? It doesn't matter. Either way, you can do some pretty interesting things with these funds. I appreciate you being here and commenting every day, Martinez. You're one of my favorite commenters, along with Tom, who's not here now, retired cop, Echo Eversky, a bunch of you guys. All of you guys that are in here are my favorites. But those are the guys that are here day in and day out. Health and Wealth, you're here all the time too. But anyway, I appreciate all of you guys. Charles, I think you're new. I've seen you a couple times lately, but I appreciate all you guys. I need to make some content on that fund with like a TLTW and a riser, RISR. I'm not saying that the only way to do everything is by selling options. There's funds out there that trade bonds and REITs, closed-end funds, business BDCs that are great. Like I always say, if I had worked at a bank or worked for a business development company or worked as an entrepreneur or something, I would be telling you guys, hey, these kind of funds are awesome because they can pay you a passive income. I'm just into passive income. It doesn't matter to me how we get it. I just like options. So we're going to concentrate on the options, especially option selling. So that's why we're going to concentrate on those. Yeah, I'm glad you got your large dividend, Echo. I mean, but Tesla, that's an example. Let's look at this real quick. Let's freaking look at this. Tesla, and let's look at Tesla versus Tesla. Now I switched them. Now it's the different colors, the underline. I should have kept it the same. My apologies, but man, that's an example of patience showing off. Or, it's another example. If you just were trying to trade these individually, you would have got fed up and dropped Tesla a long time ago. When you're an allocator or when you buy Yield Max, you have it in there. And then when something like this happens, Trump gets elected and Tesla takes off. This is awesome. You're in for it. You're in for the ride. I mean, not that there's nothing wrong with trying to jump in and out of the individual stocks as well, because you would have got this one right after the election. Most likely anyone would have got this, and you probably could have got you some of this. But this just shows you if you pick a good allocation, you have this one, you have NVIDIA, you have the good ones. Anyway, but yeah, this has been a hell of a run, hasn't it? Look, you know, Tesla has turned 216 into 424, so they've doubled. Tesla has turned 15 to 16, so they've made 10%, something like that. Okay. But when you factor in the dividend, they've really made about 40%. And then when you factor in it's a third of the year, they've really made 120%. Now, granted, you can see how it works here, because if you would have had the underline, you would have made 265. So if you're going to break off X amount of dollars, we're going to take it out that you aren't going to get this 265. You're going to get something less. How about 117, you know? But anyway, but that's an example of that's an example of patience paying off, and that thing is taking off. And Jay has the upside on cap. He has those they're so far out of the money. And, you know, sometimes he goes further than 15%. The prospectus says 15%. I've heard he's talked about it. Coinbase or he has to go out so 30% on the money sometimes. So anyway, that means he gets all that upside before he's capped. You know, I mean, and then and then in addition to that, on some of these, he also has call spreads on, or he does have call spreads on. So anyway, he's definitely got, in my opinion, yield max, YMAG, running well, and Alti, especially compared to how it was running. But you know, it's still, there's room for improvement. I'll stay on top of him. I don't have an interview scheduled with Jay. The interview I was teasing was not Jay. Like I said, this is somebody that's more big time than Jay. You guys can imagine that. Or not really, but he manages more. It's whatever. All these guys are big time. I mean, compared to me, I'm just a little retail guy. It's amazing they even listen to me. All right. Well, if you guys have any other questions, put them up here. I'll love to visit. You know what, David got him $724 on a NASDAQ STO put spread shorts. STO. I should know STO. Gosh darn it. STO. Tell me what STO is. I mean, I know I'm going to feel stupid. I mean, I was just talking about a short put spread, bull put spread. So STO. Anyway. Yeah, woof, echo. But yeah, those little 24-hour trades, or a little hour trade, what I've done before on SPX is do a butterfly just right on top of where I'm at. So even if it's just 10 points or 5 points wide on the wing, it's tiny, do it for the same day, put a stop in for $100 away, and you'll get it a lot of the times, and you won't have a lot of risk. I scout butterflies, and I did that a lot in 2021. Then it stopped working as much. Do your own research. But if you can find a market that's going nowhere, you can put a butterfly in SPX. You can do it on NDX too, right on top of the strike. You do it in the morning, and they're cheap. I mean, you don't risk very much. And if you can get a market that stays there, you're going to put an order in the market that's about $100 from where you bought it, a sell order. And if the market stays still or even doesn't go too far for any amount of time, your other order will get triggered. You'll be out. And I did that like 10 times in a row one time. It's a good scalping strategy. It used to be anyway. Sell to open. Okay, great. So you sold you a little put spread. Okay, of course. So you sold you a put spread about that. So then have you closed it yet? Or it's probably up that much in about an hour. You're just going to let it expire. You probably let it expire. Yeah. Well, anyway, that's the way to do it. That's the way to do it. Some people say single days, but I like to go out to the next day, or sometimes 2 days later, especially when I do one where I bought one too. But anyway, dude, if you sell a single day put option, you just call the low of the day. As long as it doesn't go under that level, you make your money. You can win about 3 times out of 4, easy peasy. Yeah, I agree. That's a great strategy. All right, Green Dog. Yeah, I appreciate that. All right, guys. Well, I appreciate y'all for being here. I appreciate it. I'm sorry it didn't go smooth at the start. I wasn't sure how to show the other video, but I thought that was one of the better videos I've done in a month or so. So I thought it'd be fun to put it up and then talk to you guys afterwards. Anyway, all right, guys. Well, I appreciate y'all for being here. I'm going to, I don't know what I'm going to do. I'm just relax this weekend. I do have some videos planned though. I have a couple of videos planned for this weekend. So I'll see you guys around. Okay. All right, guys. I really appreciate you guys for being here. Have a good one, man. Or men, guys, dudes. Y'all have a good one, y'all. All right, guys. Happy Friday the 13th.